Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, 16th of November, Wednesday. Kiev says Poland strike a very sensitive issue after reports say that Ukrainian forces fired the missile. So Ukraine's defense ministry is cautious after reports suggested its own armored forces fired the missile that hit Poland Tuesday night. Another article from CNBC says that Russia slams Ukraine as details emerge suggesting Kiev's forces fired the missile. 14 minutes ago, Belgium said that evidence points to Ukraine firing the missile that hit Poland. This is breaking news that are hitting the market. As you can see right now, markets are selling off after the news. After yesterday's first hit of the news, saying that maybe Russia was the author of that missile strike, we recovered from that, and at the close we were trading sideways. Right now, during overnight, we were also trading sideways, trying to break again and reclaim the 12,000 level. But right now, we are selling off due to the breaking news. So watch out, because this kind of information, geopolitical tensions, hit the market heavily. So be patient, be careful with today's price action, because something big might happen. Manage your risk as always and be disciplined. What else we are watching? Apart from overnight trading sideways in the Nasdaq, we are watching the dollar. The dollar is now trying to reclaim the 200 moving average. If we change to the 2-hour, we can see that dollar was trying to hold 106, hit that perfect daily level at 105. One more or less, and the 200. Look at this bounce of the 200, and it's now trying to hold support at these levels. If we change to slower time frames, the 15-minute is showing some kind of consolidation that might make the dollar catch some beats, make some strong move to the upside, and maybe reclaim this 107 level. The 2-hour is still shows weakness, but this dollar index is trying somehow to get some attention from investors now that uncertainty is increasing. Yields, the 2-year and the 10-year are both trading sideways. The 10-year is showing a nice bear flag around this 45 EMA that might start the move to this pivot at 3.6% in the 10-year, and the 2-year is also trying to hold these levels. If we check we can see that it's rejecting 4.4% and is dealing again with this level at 45 EMM at 4.2, and under that it's a direct move to 4%. That would be awesome for yields. What else? The inverted yield curve. You should know that we have two types of inverted yield curve. This is the 10-year minus the 2-year, the typical one that is used for long-term investments. And as you can see, after making this pivot, we rejected the upper channel and we tanked again through this support, and we are now rejecting this 0.5%. So this is also calling for fear and showing you that economy is sick. The other kind of yield that US has is inverted yield curve is the 3 months. We can subtract the 2-year, the US 2-year minus the 3 months, and we can see another kind of inverted yield curve that is pointing more to the short term. This is more reactionary than the other one. If we put a straight line at 0%, we can see that we have two big deals. This is 2019 and 2020, COVID pandemic, and then since then, the yield curve was showing that economy was recovering. But since the start of this year, since March, this inverted yield curve is showing that something big is underneath the hood. So be careful, because we are approaching also the 0% and a possible inverted yield curve also in this short-term yield curve calculation. So watch out for those. The 10-year minus the 2-year is already inverted since months ago, but this one might impact more heavily the short-term economy and might impact more heavily in the long term. So be careful, because yields are right now in the green. Fear of these geopolitical tensions and also the economy is starting to increase, and we are reaching critical levels that you need to understand before taking short and long-term positions. Crude oil. Crude oil, it's, I think, from my point of view, quite bearish. We rejected this 95 level, this critical level. I said during a YouTube short, a video that I uploaded this week, that watch out for this breakout for the 100 level again. But this is starting to look like a false breakout and starting again trading sideways, accumulating tension right here. And I would like to see a flash, a sell-off to this 81 and maybe going to 76 levels, and that would put crude oil on a fair price that will help families and US people at the gas station. Natural gas, also a critical one now that winter is coming. It's also rejecting these previous head and shoulders descending resistance. Sorry, we rejected these levels and we are now trading again sideways with 6 at support. And finally, XLY versus XLP. Remember, XLY, remember, is consumer spending, consumer discretionary, is the sector fund that shows that consumer strength, and XLP is staples. Usually, you want to see money flow into XLY instead of staples. This ratio shows that we are still seeing, after a nice pullback that showed strength for the XLY and consumer discretionary, we are right now seeing some kind of pullback and perhaps making a lower high here and coming back down again. Amazon, Tesla, Walmart, a lot of consumer discretionary stocks are already saying that their expectations may be higher than they should have coming into Christmas holidays and to the end of the year. So be careful, because this might affect the economy also and the overall situation of the Fed, the position of the Fed. XLU is also a sector that you would like to see going up slowly, that is utilities. And right now we are seeing that, but in a very choppy way. We saw this flash that was converging with the market for the sell-off during this initial September, and now we are starting the curl. So be careful with all these sector funds, because money might be flowing out of risk assets and consumer spending stocks and put it again into conservative and defensive stocks and funds. You want money to be on the risk for the bulls to go out and push the market up. You don't want a rally on the overall market to be on the defensive way. And finally, stocks. So right now, the big ones are trading sideways, more or less flat. The only one that is showing a lot of weakness is Nvidia. Let's check the daily. Nvidia was on the stronger side in comparison with the others, and it's now hitting this 200 moving average, so a small pullback is expected. But overall, Apple, Microsoft, or are trading sideways after yesterday's sell-off on these geopolitical tensions. This sell-off through this wedge on Microsoft was super beautiful. And I think it's time to wait and to have discipline and react to the news and to the markets. Overall, still uncertain what will happen throughout this week. And if we check the economic data for the day, we still have some news that might affect the market apart from the geopolitical news. 1 hour before the market opens, we have retail sales month over month, and we are expecting a little increase from 0 to 1%. This will show consumer spending also increasing and may affect the markets negatively. So watch out for this, because this kind of news, retail and spending, is quite important ahead of the season for Christmas holidays and all that stuff. For Amazon, for Walmart, and for Tesla, a lot of consumer discretionary stocks are waiting for this kind of readings of economic data to manage their expectations ahead of the end of the year. So a lot of news today regarding also export prices, industrial production. We expect this to come in lower than before, but I think the big one is these retail sales. Last thing I would like to mention is options. This week is third week options expirations. A total amount of 5 million options are expiring this Friday. And if you watch options and you think that overall market is manipulated based on the options and the max pain, this is the week in which you have to focus on this kind of information. As you can see, there are a lot of puts below 390. This is SPI options strikes. And something to note is that this 400 call has been slowly increasing and increasing as overall sentiment has changed to the bull side. But be careful, max pain is 385 and we are right now in SPI at 400. So I think we could expect markets to balance to trade sideways, chopping around between these two levels, because remember, all these options, all these 5 million trillions in dollars are written by Wall Street. And Wall Street only has one focus regarding all these options. It's not to pay any of these guys any money. So watch out, track this until the end of the week, because I think we can expect extreme manipulation between these two levels for Wall Street to not pay a penny to these guys calling for options and puts. So watch out this kind of information. This week is the one that you have to focus on these informations to try to have an edge on the overall market. And as I said, be patient. A lot of information coming around. Also these options, geopolitical tensions, economic data, discipline, and risk management. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to receive notifications when I upload new videos. Remember, I upload new videos every single day for market forecasts like this one, market updates and market recap. I appreciate your time and see you in a couple of hours with the market update at noon. Remember, be patient, discipline and risk management are key for success. Stay safe, everyone.